Welcome back to 7-Minute Options. Thursday, January 6th, got my buying power back up to 5,000 after I made a deposit. Looking forward to an exciting 2022. And yeah, so kicking things off, Astra is the first position I'm looking at. So I have a covered strangle. I picked up 100 shares for $12.50 back in the day. I have a strangle, 7.5, 12.5 strangle on here. So obviously I am now below my short put. I'm not sure what's happening with Astra. Long term, I like the stock. I believe in the stock. So what I'm going to do here is I'm going to try to lower my cost basis on the 100 shares, pick up some premium. So if I go out, say 43 days, I can sell the $5 put, pick up somewhere around 45 cents ish. The market there is 10 cents wide, but there's about 1,000 people in there. So hopefully I can get some good premium here. But look, buying power only goes down by $200. And you know what? If the stock continues to fall and I pick up these shares for $5, that's okay. It'll lower my cost basis. I do believe in this stock long term. Again, this is not investment advice, blah, blah, blah. But I like the stock. I like the company. I like where they're going. So yeah, I'm going to sell this. If this doesn't go up, if this doesn't go down and I keep the 45 credit, that's fine. I mean, a return of $45 on a $205 investment in 43 days is extremely good. So I'll take it. And let's see where that goes. All right. And I might have to lower that to maybe like 42 or 43 bucks before it fills. It's a very wide market, but we'll see where we are. All right. Actually, it just moved right now to 45. Perfect. Okay. And then the other one I'm looking at is FUBO. So FUBO is a bit of a mystery to me. If I look at FUBO, so they are one of those cable cutting companies. You can watch cable TV on your smart TV, on your smartphone, tablet. It's just like Sling or any one of those other apps where you can watch a whole bunch of cable TV channels on your smart device and not actually have to pay for cable TV. And they got all kinds of different packages and pricing. What I like about FUBO is I looked this up. So looking at the FUBO financials, if I look at quarter by quarter, their revenues are steadily increasing, right? Starting from the quarter ending 2020, June, 44 million, 61 million, 105, 119, 130, 156. So they have consistent growth in revenues. Now, they are not yet profitable, right? They're still a relatively young company. They're still growing. But if they can maintain this growth, the expectation is that at one point they will grow into profitability, right? As their losses keep getting smaller and smaller. If you take a look at their net income, it's a bit all over the place because net income has a lot of other things with it. But it's kind of all over the place. And if I look at their cash flow, for example, let's see. I was just looking at it earlier. Key stats. Yeah, there we go. So, I mean, they have cash flow operations, investing, financing, etc. So it's kind of hard to just look at it high level in about 5 minutes to see exactly what's happening with their net income. But the expectation is that the net income is still negative, obviously, but the expectation is that as they grow, their loss per subscriber will keep getting lower and lower, and eventually they will be profitable. But yeah, FUBO has been really beaten up lately. Not sure exactly why that happened. I mean, FUBO was up at 53 bucks a share at one point, and then it bounced back to 33. After falling down to 15, it bounced back to 30, and then it came down again, bounced back to 30, came down again, bounced back to 30, and now it's down again. So this is a prolonged down move here. We're down at 14, and so I expect and hope that this will move back to 30. That's where our strangle is at the moment. And I hate having a position like this where, for example, in my $30 call, I only have $8 in extrinsic value, right? Which means I can hold this for 29 more days and really only hope to make $8 on it if FUBO doesn't move. But right now, FUBO is down to 13, so same thing. I can sell a put. Because remember, I picked up 100 shares here for 20 bucks. Why don't I try to sell some more puts on it? And if I pick up shares at like a crazy discount, that's fine. It'll just lower my cost basis. So right now, if I go 43 days out to the February expiration, right now, there we are at just under $14 a share. I can go down to, say, $12 and pick up 70 $9 or thereabouts of credit for 1.5 theta. So there again, $500 buying power, picking up 1.5 theta, not bad. If I go down to 11, I give up $400 of buying power, and I get $50 in credit. Again, 1.2 theta, so I'm paying right around 300 some odd dollars per theta, which is kind of like right where I like to be. If I try to go outside the expected move at the $10 strike, I can pick up, well, there's only like 66 people in there, so that's a little bit difficult to transact. But if somebody wants to sell this to me or buy it from me, I get 30 bucks here for $300 of buying power. I get 1 theta. And my break even there on these ones would be $9.70. So like this would be a significant 30% down move for me to pick up these shares. If I could pick them up, great. If not, I'm happy with getting 1 theta for 300 bucks. And if I pick up 30 bucks on a $300 investment in 43 days, I'm okay with that too. So I probably won't be rolling this one. I'll just let it expire unless FUBO somehow moves back up and the extrinsic value just evaporates. Then at that point, I'll get rid of it. So that's it for that one. I'm going to route this one. You know what? Should I go for the $11 one? $400, I get 50 bucks in credit, 1.2 theta, same thing, right around 300 some odd bucks per theta, and it's right at the edge of the expected move, 18 delta. My 1050 would be my break even. You know what? Let's do this one. Yeah, let's do this one. I like it. I'm going to do this one, and there's more people in it. So yeah, let's see where that goes. The other thing about FUBO, if I go back to my positions here, I only have $6 of extrinsic value in this call. I still have 73 in the put. I mean, again, this put is very far away. Ideally, I'd like to move this out and establish a strangle, and maybe I can roll it out. So what I can do is I can take a look at this one, try to roll it out. What happens if I roll it into, oh, there's no, I need to take it out to the February. Let's see. We jump from February to May. Yeah, so there's no March or April options yet. And March 1st are earnings. So I'd rather not, if I go out to May, then I'm going to hold this thing for 2 months after the earnings come out. I'd be happier if I kept it until earnings, and then I can adjust it after earnings come out in March. But even if I were to kick this out, I somehow ended up in the weeklies. I generally don't like to do that, but if I want to push out to the monthlies, generally there's more people in there. So right now I would have to pay 71 debit. Ay, brutal. All right, there you go. FUBO filled for 50 bucks. Fantastic. But ideally, I would love to say take this down to the 27. Or what if I take down both to the 25? At least I have a straddle there. I got to pay a lot. Again, there's not a lot of extrinsic value in here, so anything I remove here is intrinsic, which is why it cost me so much. This is definitely a bad move. Yeah, I would not be doing that. If I go back here, roll it out to May, I would only get 36 in credit. And as soon as I start to establish a strangle here, I got to pay a debit for it, so I'm not particularly happy there. And I can't even roll the strangle down. Even if I try to take the strangle down to 26, for example, yeah, I got to pay a lot of money there. So no, I'm going to be holding this one, and I'm going to be rolling it until FUBO moves back up, which I hope it will. So yeah, so that's pretty good. I'm happy with that 11 put. So I still have $4,200 buying power. I definitely want to keep some buying power handy. I am nervous about a down move. One position that I've been eyeing, which is a fantastic one I picked up on Option Alpha a while back, is if I take the SPY, if I go 43 or let's say 45 days out, and what I do, oh, there it is, yeah. So I pick up or I sell a 70 delta put, and I buy 2 30 delta puts. Then I pick up a credit, in this case, $300 of credit. And what this does is, if I look at the analysis here, there we go. Kind of zoom in a little bit. So that flag is where we are today, right? SPY is at 468. If this moves up to the break even of around 477, above 477, I get to keep this credit, right? Or keep some of this credit. Above 480, I keep all of it. That's where the put is. So if SPY continues to move up, then I get to keep the entire $300 credit. That's great. But what this is this is a hedge. In other words, you can see the profits go all the way, keep increasing as SPY goes down. So if SPY does have a meltdown, and if this stock market crash comes that everyone talks about, this thing does have a break even right down here at 429, and above that, it's pure profit. And so this acts both as a hedge and as a potential bullish position if SPY continues to move up. If I look at the chart for SPY, this diagonal line here, SPY was hugging this line very closely for much of 2021. Started deviating in September, but came right back to it, and then it's been kind of bouncing around. And so the question is, if it bounces right back to this line, then this position here that I just looked at would again be in the positive, right? So then I would get to keep the $300 credit. And if not, it would have to melt down to right around, so the break evens would be 429 and 476. So let me just jot that in. 429 on the downside and 476 on the upside. So that's it. So basically, as long as SPY, you can see SPY here, as long as SPY bounces back and continues to move up toward the same trend line, this is profitable. Or if SPY has a meltdown and there's a big market correction, then we're down here and this thing is again profitable. Right now we're at 468 for the SPY. So a 10% drop would be 46 points, which would be right around 420, 422 or thereabouts. This would be 430. So we would need a good 9%, maybe 10% drop for this to be profitable on the downside. So as long as SPY moves up, we make some money. If SPY goes down, we make a lot more money. The other interesting thing about this is that it's Vega positive, which means if volatility picks up, we can get out quickly and make some money. For example, if SPY starts to drop quickly a little bit here, but kind of stops dropping, as long as volatility is high, I might be able to sell this for a slight profit or a slight loss and not the main loss that you see here. This does have a pit, obviously. The worst case here is the two puts that we bought here at 453. So there, the max loss is 2,390. So that's quite considerable. Is that if the price ends up down here, it does hurt my account in a big way. So that's what I'm kind of thinking about. I'm not sure how to play it. Because if I do think it's going to move back up, then maybe it's a good play. Anyway, I'm thinking about that one. I don't think I'm going to pull the trigger on it today. I'm going to dwell on it overnight, but I'm going to lower this price on Astra, get this filled. Any takers at 43? Yes, 43. Perfect. I'm not going to put in a GTC order. I am perfectly happy running those down to 0 to squeeze as much profit as I can out of them, or pick up shares at a great deal discount. But anyway, that's it for today. All right, thanks. Bye.